So hi to whoever is joining or is going to join later. My name's Irina. I'm a practicing accountant in Chicago, Illinois. My company is Virtual CFO Pros. I provide finance consulting and part-time CFO services to business owners. And I work with real estate investors as well, and I'm kind of in the real estate industry. I've worked for real estate companies throughout my career and asset management companies. I actually work for a private equity company that supports real estate investors, and what they do, all they do is low-income housing, and they provide these tax credits for low-income housing investors. And so I've learned how to look at deals, manage deals, how to analyze deals. I've also worked on the lender side. I still work on the lender side where I help investors broker a loan for their property. I help bring lenders and investors together so that they can work on these deals. But the reason I wanted to do this video is because I've also read a ton of real estate investing books. So even though I have a real estate background, I'm still like a novice, a rookie in real estate because I don't own any real estate. So I wanted to do this video as a real estate apprentice and go over what I know or what I've learned about real estate investing and what I think other rookies should be aware of. Because a lot of investors, and not just investors, but people in general, they like to focus on cash flow. So real estate investing is known for one thing, cash flow. No matter who you talk to, investors seem to always be mesmerized by the single measurement. Many real estate investors love to chase after cash flow and cash flow only, often completely failing to take notice of much more lucrative benefits of real estate investing. Talk about shiny object syndrome when focusing solely on monthly profits that get deposited into your account. But if you're buying, analyzing, negotiating deals based on cash flow only, you could be missing out on a lot of other benefits. So let's talk about the 10 metrics of real estate investing. Here they are. They're all here for you. Cash flow is in there. Cash on cash return. I actually have a podcast on number, 5, cash on cash return. I have a podcast where I talk about leverage in real estate, which is basically your cash on cash return. So all of these are very important to consider when you are making an investment, when you're buying property. And so I'm now going to get into each one of them. What I've done is I've consolidated this whole list into 4 major categories in real estate investing. And they are cash flow, appreciation, tax, and borrowing, how you leverage debt to equity. So the reason I did that is because as a real estate rookie, look for investment properties, my first investment property that I want to buy this year, I want to consider everything that I can, even, this gross rent multiplier, because I want to know how much revenue am I going to make if I buy, a duplex that I'm thinking about that has, 2 renters, what is going to be my gross rent multiplier, because I want to know how much money am I going to make that's going to cover my mortgage or some of my mortgage if possible. So it's very important to consider a lot of different factors and not just cash flow. Cash flow is net activity. I mean, the definition of cash flow is your net activity between your revenues minus your expenses. And so it's great to consider cash flow, and I've left it in there as my top 4, right? I said cash flow, appreciation, tax, and how you leverage debt to equity. Those are my top 4. And so if you're thinking about cash flow only, you might be limiting yourself. So take me, for example. I'm a real estate apprentice. I'm a rookie. I don't own any real estate properties. But if I'm looking into buying real estate, my first thing is I have to make sure that my borrowing is substantial and that it covers what my future payments I want to look like. So me, for example, again, I'm a consultant. I'm a finance consultant. So I earn 1099. That's all I work on. I don't work on as a W-2 employee anymore. So for those of you who are familiar with the tax system, we have 2 ways that we can get paid in the US, either through a W-2 or a 1099. And so because I'm a 1099 employee, it makes borrowing a lot harder for me. And of course, it depends on a lot of other factors, and I'm working out the intricacies of all this. But if I were to go into a deal just thinking cash flow only, I could really disappoint myself because, what if my borrowing doesn't work out? What if the lender doesn't want to lend me money because I'm only a 1099 employee? A lot of borrowers like to see at least your ability to make mortgage payments of up to 6 months. So if you're a 1099 employee, a lot of times it's harder to show proof of that income because it's so inconsistent, right? As a W-2 employee, you are guaranteed every 2 weeks you get paid and you're guaranteed that income. As a 1099 employee, you're not. So you could be, on a consulting project for 3-4 months out of the year, and that could be the only thing you do all year. So it all depends on a lot of different factors. So that's why I think it's important to look at everything before making a decision to buy a property. You have to consider your financial situation in all different types of ways. Cash on cash return is my favorite one because it helps you understand how leverage in your borrowing returns all this money to you as you're investing. Loan to value ratio, right? So LTV, a lot of borrowers want to see 36% and no more than that. Debt to service coverage ratio, DSCR, is important because as investors, you're typically making a lot of these DSCR loans to buy property. So there's a lot of things to consider, and this is just one list, and most investors would agree with this. I've read books by Bigger Pockets people. Bigger Pockets, he's a Bigger Pockets VP. Bigger Pockets is a big platform for real estate investors, and he wrote this book. It's called Real Estate by the Numbers, and he talks about every one of these in his book. He doesn't just cover cash flow. So I think it was really important for me to make this video. For those of us who are real estate rookies like myself, always be conscious about other things, expenses, and not just what expenses you can see, but expenses that could possibly arise during your investment. There's a lot of risk associated with investing into real estate, and those risks are tangible, meaning you could have your roof could cave or something, or you could have a really bad tenant who destroys your one of your units, and you might have to fix this. You might then have to take a long time to find a qualifying tenant. So you have to consider all these things before just thinking about cash flow. And of course, I've always said this, cash flow, we wouldn't be in business if it wasn't for cash flow. So of course, cash flow is one of the considerations, but it's not the only one. So for me, it's cash flow, appreciation, tax. A lot of investors still forget about this really important, lucrative benefit of investing in real estate, and that's taxation. That's how I got into this whole real estate world. And then of course, borrowing and how you leverage debt to equity. So those are my top 4. If you guys have any questions about real estate investing or investing in any form, I provide advisory services. I do these Zoom calls just like this. I get on Zoom calls with investors and everyday business owners and talk to them about their financial needs for the year. We set goals, we plan, and we talk about, different aspects of investing. And actually, right now with where the real estate market is, I talk to a lot of investors who kind of, put a pause on buying property. Rates are still kind of fashionably high. When you could see rates as low as 4% last year, that same financing deal you can do at 6 or 7% now. So a lot of investors are being cautious and they're waiting to see, some of the seasons to pass to hopefully, watch their interest rates go down a little bit. I talked to a realtor yesterday who mentioned that she's going to wait until the end of the summer to buy her next property because she thinks that the interest rates are going to fall in the summer because of how heavy the activity of buying real estate is in the summertime. Seasonally, maybe people buy more in the summer than they do in the winter or spring months. So, I mean, there's so many factors to consider, and every situation is different. You know, I mean, I mentioned me, I'm in the real estate world just as a professional, but I'm a real estate apprentice. I'm a rookie. I don't own a real estate just yet. And so now that I'm getting into this new year, this 2023 year, where I'm planning to buy my first investment property, I'm considering a lot of things. I'm not just thinking about the cash flow part. It would be great. You know, I talk to realtors who tell me, hey, you know, I've got a, you know, off-market property for so much money that can earn you cash flow this much. Well, that's great, but you have to consider every aspect and risks associated with it, as well as your debt to equity leverage and how you leverage debt to equity so that you can even buy the property in the first place. So don't be limited just to cash flow. I think it's great to think about cash flow. We're in business to make money, but don't limit yourself just to the idea that it's cash flow only, because there are other things to consider when investing in real estate, and they are these 10 things. Go out there and, you know, read the books. There's so many real estate investing books that you can read. Just Real Estate by the Numbers by this Bigger Pockets guy, you know, talks about all these 10 factors that you should consider when real estate investing. So don't limit yourself to just cash flow. Consider, you know, even the bad things of investing. That's how you can analyze some of the risk associated with making a high purchase. And, you know, for those of us who are rookies, this is a big responsibility. So when you buy one property, you know, you're taking on a heavy loan. Properties these days are not under 100,000. I don't know where you can find a property under 100,000. If you can, great. But, you know, if you're 100% borrowing this 100,000, that's a massive loan to take on for one person. So when you're buying more and more properties, these factors come in handy because you are considering all of your risks and things that could come up as you're buying more properties. As an advisor to an investor, I could say, yeah, you know, go buy more property, go diversify, go increase your portfolio. It looks great, you should do it. But you should always consider risk associated with buying multiple properties, especially if you're a portfolio owner. My favorite real estate investing is a REIT. It's a real estate investment trust. It's just like a real estate stock. So you buy a share in a real estate company, a real estate investment company. Most of these real estate investment companies own retails like Target or Walmart or Crate and Barrel, or whatever REITs that are available out there for luxury living or whatever. So you can buy a share in, for example, a Target REIT and own a share of that property and earn the passive income that portfolio owners earn on that property. So it's not always about owning a physical property. Catch my future videos on YouTube where I'm going to discuss REITs a little bit more in detail, but don't limit yourself to just one thing. Diversification is very important in investing and considering everything, not just the good stuff, not just the cash flow stuff. You know, cash flow is great. As business owners, we want to earn cash. We wouldn't be in business if we wouldn't think about the cash flow part. But there are other factors to consider. And so always be conscious of other things that could come up as you're starting to invest or as you're progressing in investing. And reach out to me if you have any questions. I provide advisory services to business owners and real estate investors. I do taxes and I help with QuickBooks. So for those of you who are on QuickBooks and need some help with understanding how to read financial statements and what they're telling you, or fixing your QuickBooks, I do that as well. Feel free to DM me or message me under this video, and I will talk to you guys soon. Bye.